Welcome back to Stock AI Insights. This is earnings analysis, and I'm your AI analyst. Now, just a quick reminder before we jump in, this content is for your education only and doesn't count as investment advice. Remember, all investing carries risk. All right, let's get into it. We're breaking down Circle's Q3 2025 earnings, which dropped on November 12th. And listen to this. The headline number was a jaw-dropper, a 66% year-over-year explosion in revenue. So, what's the story here? Let's dig in.
So right off the bat, that number just jumps off the page, doesn't it? Nearly $740 million. This isn't just growth. This is accelerating growth. It's a huge signal that Circle is firing on all cylinders. And it tells us they're not just riding the wave in their market, they are actively carving out a bigger and bigger piece for themselves.
To really get a feel for just how impressive this acceleration is, we need to see what Wall Street was actually expecting from them.
And wow, just look at this chart. That's not just a beat, that's a blowout. They absolutely smashed the consensus estimate. This kind of revenue rocket ship doesn't just happen. It's fueled by some really strong market tailwinds for sure, but also by Circle's growing dominance. CEO Jeremy Allaire basically said it himself.
And that's the real story here. They're winning. In a market that's already growing, they are grabbing more and more of the territory. Think about it, gaining a full percentage point of market share in just one quarter, that's a huge indicator of a powerful competitive edge. But you know, as incredible as this revenue story is, the profitability picture, that's where things go from impressive to downright dramatic.
Okay, let's talk about the bottom line. Because this is where Circle didn't just meet expectations, they completely flipped the script on what everyone thought was possible this quarter.
64 cents. Let that sink in. This number was a total shocker. Why? Because analysts were actually bracing for a loss. So pulling a profit out of the hat like this is a massive testament to just how powerful and efficient Circle's platform model really is. This slide right here tells the whole story. You can see it clear as day. The street was modeling a loss of 20 cents per share. Instead, Circle delivered a 64-cent profit. A swing that massive isn't just a small adjustment. It's proof that there is a serious cash engine at the heart of this business. And this was no fluke. It was by design, a direct result of the company's DNA, something CFO Jeremy Fox-Geen pointed out on the earnings call.
And right there, that quote perfectly sets up this central puzzle of this earnings report. You've got revenue soaring, profits absolutely demolishing expectations. You'd think the stock could be a rocket ship, right? Well, it wasn't. So what on earth happened?
This brings us to the guidance, and to the one question that was on every investor's mind after seeing these otherwise stellar numbers.
The answer, it turns out, has nothing to do with the quarter that just happened, but everything to do with what the company plans to do next, specifically, how much they plan to spend.
So as you can see, the company bumped up its forecast for operating expenses for the full year. Now, from an analyst point of view, this isn't just reckless spending. It's a very calculated strategic move to pour the extra cash they just made right back into the business to fuel future growth.
So where's all this extra money going? Straight into what they believe is their future. They're beefing up their platform, they're hitting the accelerator on their new ARC network launch, and they're doubling down on global partnerships. The CFO made it very clear this was a deliberate choice. Look, what we're seeing here is a classic Wall Street dilemma. Circle is basically choosing to sacrifice some short-term good feelings and profit-taking for what they believe is a shot at long-term, absolute market dominance. It's a bold bet on themselves, that's for sure. But the market? Well, the market often has a very short attention span. It tends to focus on the here and now, and it reacted with a big dose of uncertainty. This next chart shows you exactly what happened.
And there it is. That drop from over $98 down to the mid-80s shows you the market's reaction in real time. Investors loved the results, no doubt about it, but they got nervous about the price tag for future growth. And that all leads us to our final verdict.
So here's the bottom line. Circle delivered a phenomenal quarter that proved the power of its business model, but it rattled investors by deciding to reinvest its winnings into an aggressive long-term growth plan instead of letting the profits hit the bottom line today. Drop a 1 in the comments if you found this breakdown helpful. We'll see you in the next earnings analysis.